Hello and welcome. Today, we're diving into a topic that honestly trips up so many business owners, VAT deregistration. We're going to get into exactly why HMRC can still demand 6 years of your records long after you think you've closed that chapter. Now, this entire discussion was put together for you by the specialists at the award-winning UK firm Pro Tax Accountant. They're on the front lines. They see where people get caught out every single day, so they've helped us create this guide to walk you through what you really need to know. So let's get into it. Okay, let's just imagine for a second. Let's say you're a freelance graphic designer based in London. You've had a great run, but you've decided to close up shop. You've done all the paperwork, you've officially told HMRC you're deregistering for VAT, and now you're looking at stacks of old files. The first thing you want to do is just get a shredder and have a massive clear out, right? Well, you might want to put the brakes on that idea. You see, there's this huge misconception that once you're done with that, you are truly done. But getting this wrong isn't just a tiny slip-up. It can turn into a really costly headache that can come back to bite you years down the road. Right, let's get down to the nitty-gritty. We're going to start with the one fundamental rule that every single person who has ever been VAT registered needs to burn into their memory. It's the foundation for everything else. And that magic number is 6. You are required by law to keep all of your VAT records for a minimum of 6 years after the date you deregister. And that last part is so important. It's not 6 years from when you created an invoice. It's 6 years from the moment you officially stepped out of the VAT system. And look, don't just take my word for it. This isn't just some friendly advice. It's written in black and white. This quote is pulled directly from HMRC's own guidance from VAT Notice 700/21. This is the absolute bare minimum, the baseline requirement. So, you might be asking, why on earth does HMRC need such a long memory? Well, it's actually pretty simple. That 6-year window is their time frame to launch a compliance check into any of your old VAT returns. If they decide to open an investigation and you've already shredded all your proof, you've got no way to show your numbers were correct. You're basically left defenseless. So that brings up a really important question. When HMRC talks about records, what are they actually talking about? Because it's a whole lot more than just a few old receipts in a shoebox. Let's break it down into a really simple checklist for you. We're talking about the whole shebang here. That means your VAT account itself, every last sales and purchase invoice, any credit or debit notes you've issued, your complete bank statements and paying in slips, your records of daily takings, things like till rolls if you were in retail, plus all your import and export documents, and of course your annual accounts. Think of it as the complete financial scrapbook of your business. And here's a quick pro tip for you. Try to shift your mindset. Stop thinking about keeping records as a boring chore. Instead, start seeing them for what they are. Your insurance policy. Because if HMRC does come knocking a few years from now, a complete, well-organized set of records is your #1 absolute best defense. It could literally be the difference between a quick, painless query and a full-blown investigation with some seriously painful penalties. But that's not all, and here's where so many people go wrong. Just when you think you've got that 6-year rule all figured out, there's a huge exception, hidden away in the fine print. So stay with me because this next point might actually surprise you. Because believe it or not, there are some pretty common situations where 6 years just isn't long enough. There's a scenario where you could be on the hook for a full decade, long after you thought you were completely in the clear. This big exception is called the Capital Goods Scheme, or CGS for short. It's basically a special set of VAT rules that only applies to really high-value assets you might have bought for your business. We're talking about the big-ticket items that are meant to last for years. Okay, so what kicks this off? Well, as of the 2025/26 tax year, if your business spent £250,000 or more, and that's before VAT, on any land or buildings, then boom, you're in the scheme. It also applies if you spent over £50,000 on computers or even things like aircraft or ships. But the absolute killer detail? For property, that adjustment period is a full 10 years. Buying a small commercial office or a workshop in many parts of the UK could easily tip you over that £250,000 mark. Let's look at how this plays out. Think back to our London consultancy. In year 1, they buy an office for £300,000. Fast forward to year 4, business changes, and they deregister for VAT. Then, in year 7, they think, great, the 6-year rule is up, and they shred their old files. Big mistake. Because that office is a capital goods scheme asset, HMRC can still look into it and potentially demand VAT adjustments all the way up to year 10. This means the records for that building had to be kept for that entire decade. So here is the key takeaway, the one thing you really need to remember from this section. If your business has ever owned an asset that falls under the capital goods scheme, the 10-year rule for that specific asset's paperwork completely trumps the standard 6-year rule. It is the one exception you just cannot afford to get wrong. Okay, so taking all of that on board, let's pull this all together into a straightforward action plan, a final checklist to make sure you stay on the right side of the rules and avoid any of those nasty surprises down the line. Here's your plan in just 3 simple steps. 1. Always keep your VAT records for at least 6 years. No ifs, no buts. Make it a non-negotiable rule. 2. You have to actively check if you've ever bought any high-value assets. Look back through your books. Did you ever buy a property or a really expensive computer system? And 3, if you have even the tiniest bit of doubt, especially about the capital goods scheme, please don't guess. Getting proper professional advice is absolutely essential. Now, just before we wrap up, I do need to say that the information we've talked about today is for general guidance only. You really shouldn't rely on it exclusively when you're making your own financial decisions. You know, navigating all these rules can be incredibly tricky. So before you make any final decisions, you really must consult the tax experts. For specialist help with your VAT deregistration or any other tax question, you can get in touch with the team at ProTax Accountant. So let me just ask you, after hearing all of this, are you feeling a little unsure about what your own obligations are? Does that capital goods scheme sound like something that might just apply to your business? If the answer is yes, please don't just leave it to chance. The best thing to do is reach out to the team at ProTax Accountant for some clear, expert advice. You can get them on WhatsApp or by phone at 079-85-689-912, or just drop them an email at info@protaxaccountant.co.uk. Thanks for watching.